What if you invested $12,000 in MSTY? The Truth About High-Yield ETFs. What if a single investment could generate thousands of dollars in monthly income? We're taking a close look at the high-yield ETF MSTY and answering the question, what would a $12,000 investment really look like? In this deep dive, we'll expose the mechanics behind the massive payouts, reveal the hidden risks of yield erosion and return of capital, and give you a clear, actionable plan to approach this type of passive income strategy. This isn't just about one fund. It's about understanding the future of dividend investing and how to protect your investment portfolio from hidden dangers. Before we dive in, if advertisements should interrupt this video, please do not click off of the advertisements. Please allow them to play through as a thank you to me for bringing you this valuable information. Now let's continue. Imagine this. You've worked hard your entire life, and now you're dreaming of a retirement where your investments work for you, not the other way around. You've heard the old rules. Save diligently, invest wisely, and aim for a modest 4% annual return. It's a solid, time-tested plan. But what if a new kind of investment promised you a return not of 4%, but of over 100%? That's the promise of a new kind of financial vehicle, a new wave of high-yield ETFs. They whisper a siren song of massive monthly income and a lifestyle of freedom. They offer a yield so high it seems almost unbelievable. And naturally, a question forms in your mind, a question that is the very cornerstone of all sound investing. What's the catch? In this video, we're going to answer that question. We'll strip away the headlines and the hype to reveal the unvarnished truth. We'll take a hypothetical $12,000 investment and follow its journey into one of these funds. And by the end, you will have a clear, simple roadmap to understand whether this is a financial powerhouse or a cleverly disguised trap. Understanding the engine. What is MSTY? Let's begin with a clear definition, so we're all on the same page. The fund we're examining is called MSTY, the YieldMax MSTR Option Income Strategy ETF. Now, don't let the name intimidate you. In simple terms, this is an ETF designed to give you high monthly payouts by focusing on a single, highly volatile stock. MicroStrategy, better known by its ticker MSTR. But here's the critical detail you need to understand right from the start. It doesn't actually own the MicroStrategy shares. Instead, it uses a brilliant but complex strategy to mimic the stock's price movements. Think of it like this. If you wanted to follow a race car on the track, you could buy a ticket and sit in the stands. Or you could build a remote-controlled car that perfectly mirrors the race car's every move. MSTY is that remote-controlled car. It uses a combination of options trading to get exposure to the stock's performance without owning the asset itself. This unique setup is the foundation of its high-yield potential. Unlike traditional funds that pay dividends from company profits, MSTY's income is generated from the premiums it collects from selling options. And those premiums are the fuel that powers this engine, allowing it to offer some of the highest yields in the entire market. It's a different kind of investment management. The master class, how the payouts are generated. So, how does this engine actually work? Let's take a look under the hood. The entire strategy is built on two primary actions. First, it creates a synthetic long position in MicroStrategy. This is a fancy way of saying it buys call options and sells put options at the same time. The result? It behaves as if it owns the stock, profiting when the stock goes up, but also taking a hit if it goes down. It's a cheaper, more flexible way to get market exposure. Second, on top of this synthetic position, it sells a steady stream of covered call options. This is the real source of its massive income stream. The fund sells the right for other investors to buy MSTR at a certain price. In exchange for that right, MSTY receives a premium, which is then distributed to you the shareholder, as a dividend. This strategy thrives in one specific environment, a sideways or slowly rising market. In those conditions, the fund collects premium after premium, month after month, without ever having to sell its synthetic position. But if the underlying stock, MicroStrategy, suddenly skyrockets, those sold options get exercised. The fund is forced to give up its exposure at the strike price, capping its gains. This is a crucial trade-off. In exchange for high cash flow, you give up the potential for explosive capital appreciation. The upside is capped. The hidden cost, return of capital, and NAV erosion. Now, for the most important part of this entire discussion, the catch. The baggage we mentioned earlier. It's what separates a true high-performance investment from a mirage. The majority of these massive monthly distributions are classified as return of capital. Let me paint you a picture. Imagine you have a beautiful, valuable painting. Instead of selling it for a profit, you decide to cut off a small piece of it every month and sell that piece to generate income. You feel rich because you have cash coming in every month, but you are slowly, inexorably destroying the value of the original painting. That is return of capital. It's your own initial investment being returned to you in installments. The high yield is real, but a significant portion of it is not coming from growth or true profits. It's coming from a liquidation of the fund's own value. The end result is something called NAV erosion. The net asset value, or NAV, is the true value of each share of the fund. We've seen with other similar funds that while the payouts are large, the NAV consistently trends downward. Your investment portfolio is shrinking, even as your cash flow feels robust. This creates a dangerous psychological illusion. You feel like you're building wealth, but you are, in fact, gradually consuming your principal. The clear path, a step-by-step investment strategy. So with all this information, what is the clear path to success? It's not a path of blind faith. It's a path of active, disciplined, and informed strategy. This is not a set-it-and-forget-it fund. It's a tool, and like any powerful tool, it must be used with knowledge and purpose. The key to success with a fund like MSTY is to manage the return of capital. You need to treat it differently than a traditional dividend stock. The goal isn't to simply collect the income and spend it. The goal is to strategically use it. Here is the step-by-step process you could follow to turn that $12,000 investment into a significant income-generating machine. Step 1. The initial investment. You invest your $12,000 into the fund. This is your initial capital. Step 2. The reinvestment discipline. Here is the most crucial step. For a set period, you commit to reinvesting every single dividend you receive back into the fund. Do not touch a single penny. This is how you combat NAV erosion. You are using the fund's own distributions to purchase more shares, effectively rebuilding your principal as you go. Step 3. The growth phase. This is where the magic of compounding, even with return of capital, starts to work. By reinvesting your distributions, you acquire more shares. Those new shares then generate more distributions, which you, in turn, reinvest. Your position grows not through the appreciation of the underlying asset, but through the accumulation of shares. Step 4. The income phase. After a significant period, say a decade or two, you switch gears. You stop reinvesting and start living off the income. Because you were so disciplined during the growth phase, your portfolio is now large enough to produce a substantial monthly income. The real-life projections, your future cash flow. Let's look at the numbers. We'll use a realistic, yet still aggressive projected annual yield of 15%, with monthly reinvestment, to show you what is truly possible. An initial $12,000 investment, with that 15% reinvested yield, could grow to over $48,000 in a decade. It's a powerful demonstration of focused accumulation. And if you stayed the course for several decades, reinvesting every single distribution, that $12,000 could become a portfolio valued at over $795,000. Think about that for a moment. This isn't a magical lottery ticket. It's the result of a disciplined strategy. And here is where your dream becomes a reality. At that level, your annual income from distributions would be over $95,000, which translates to nearly $8,000 per month in pure cash flow. Imagine what that would feel like. That's the reality of a disciplined strategy. And here is where your dream becomes a reality. At that level, your annual income from distributions would be over $95,000, which translates to nearly $8,000 per month in pure cash flow. Imagine what that would feel like. That's the reality of a disciplined strategy. The final verdict: a leaking faucet or a yield machine? So, is MSTY a powerhouse or a time bomb? The answer is both. It is a passive income powerhouse for the savvy, disciplined investor who understands that they are not building wealth in the traditional sense, but rather they are using a financial machine to generate and then rebuild capital. But it is a ticking time bomb for the naive investor who sees only the headline yield and spends the distributions, not realizing that their investment principle is quietly being eroded. This isn't a no. It's a know what you're doing. This type of fund shines when you treat it as a specialized, targeted income stream, not the bedrock of your entire retirement portfolio. The true key to success here, as with all great things in life, is discipline, knowledge, and a commitment to your plan. The opportunity is real, but so are the risks. By understanding the engine, recognizing the return of capital, and having a clear strategy to rebuild your principal, you can turn a high-yield vehicle from a leaking faucet into a powerful, consistent cash flow machine. If this analysis helped you better understand this new frontier of dividend investing, please give this video a like. Let me know in the comments if you've considered this strategy and what your biggest questions are. And be sure to subscribe and hit that notification bell so you don't miss our next deep dive. Thanks for watching. Disclaimer: this video is for equipping, educating, and empowering and should not be considered financial advice. Investing involves risk. Always consult with a qualified financial professional before making any investment decisions. Your financial well-being is paramount.